Today, I want to talk about how the New York Stock Exchange has fallen to corruption. I want to talk about what they've just said about AMC and its FTDs, why the Regulation SHO list is so important, and finally explain how Twitter plans to take on Wall Street. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, the New York Stock Exchange tweeted saying in response to public inquiries, a particular stock's inclusion on the threshold securities list, which involves the clearing of transactions, is based on specific criteria dictated by the SEC's Regulation SHO. It says securities cannot be added to or removed from the list in any other way. It's not at the exchange's discretion. Saying the SEC has a public document explaining Regulation SHO, which includes a detailed discussion on the threshold securities list. It also provides contact information at the SEC for related questions. Now, what is interesting here is A, the New York Stock Exchange is avoiding all liability and responsibility, but is also saying that AMC has not been inappropriately added to or removed from the list. It's on there because there are indeed tons of FTDs. It's not been added to the list or taken from the list by mistake. It is on the list and continues to be on the list because of the regular and recurring massive amounts of FTDs. I think it's also a massively telling sign that they've had to specifically say a particular stock instead of mentioning AMC on Twitter, because they know about the massive amount of backlash they'll receive from mentioning AMC. But it's also interesting they've tried to shift the blame over to the SEC and even given specific contact details. But the ape Jeremy from Utah added saying what a generic response to a very serious problem. Now that word is getting out, they've stopped answering their phones and hanging up on people. He said it seems we have zero accountability or anyone to help us or point us in the correct direction. This is why I say the New York Stock Exchange has fallen to corruption, because they're trying to abstain themselves from any kind of responsibility or liability and instead shift the blame elsewhere. As AMC Tamaz tweeted, he said he just called this specific number, which I believe to be the New York Stock Exchange number, and complained about AMC being on the threshold list for 28 days. The call receiver said to email compliance and just simply hung up. He said this corruption is deep. Again, this also goes to show, when combined with their Twitter tweet, that this is completely out of the realm of the New York Stock Exchange and they can do absolutely nothing to stop these illegal FTDs. It goes to show they too are likely paid off and trying to shift the blame elsewhere. Now, they are partially correct, and they've even said themselves securities cannot be added to or removed from the list by any individual person. They can't take AMC off the list, they can't stop these FTDs. It needs to be the market makers stopping the FTDs themselves by stopping committing illegal crimes. But all this is effectively saying is that we can't do anything about it. We need the market makers to stop behaving illegally, but we have no jurisdiction and can't force them to stop. And again, what's crazy is, as Nate tweeted, AMC has been on the Regulation SHO list for 41% of this year's trading days. But if you ask the New York Stock Exchange president, Lynn Martin, why, she blocks you. And he said, as somebody invested heavily in the New York Stock Exchange, I like to know the NYSE president lawfully protects its investors, but she doesn't. Instead, she messes retail to assist the 1%. And interestingly, Main Savior has even found the specific contact information, aka email and telephone number, of Chairman Gary Gensler. Obviously, he said be polite and nice, but I also agree that this is indeed something that needs to be raised with the SEC. I think considering the New York Stock Exchange and the SEC are now receiving so many complaints about AMC being on this threshold securities list, something must be done. That illegal crimes are no longer going unnoticed and hidden. These crimes are obvious for all to see. Considering the rules and laws of the SEC's Regulation SHO closeout requirements are now officially being breached beyond that 13-day limit, and well beyond that 13-day limit, we now have grounds for an official lawsuit. These rules are being broken and violated, and the SEC is not enforcing those laws. Because obviously if they were doing something about it, AMC wouldn't be on that Regulation SHO list. But because AMC is still on that list, it means those FTDs are still occurring regularly every single day against the SEC rules. And now the reason why the Regulation SHO list is so important is because of this tweet from Say an Ape, which I actually didn't know about. He tweeted saying back in 2021, pre-January, GameStop was on the threshold list for 35 consecutive days before reaching $500 per share and the buy button was taken away. Tomorrow will be 30 days for AMC, which is AMC's longest running streak on the Regulation SHO list. Earlier this year, it capped out at 24 or 25 days. Maybe when we reach this 35-day limit, that is the peak of financial stress that these hedge funds can handle, and when we hit 35 days, those FTDs spiral out of control, and those shares must be bought back, causing a squeeze, or at least causing a run-up. This could end with AMC running to $500 per share and above, and potentially triggering the short squeeze, which could potentially take us significantly higher than $500 per share, because GameStop reached $500 on only FOMO buying and zero short covering. So if the shorts are indeed forced to cover when AMC hits $500 per share and above, AMC would run significantly higher. Again, obviously, I'm not saying this is a guarantee, but it is something that is very, very interesting to know, especially as AMC hasn't reached this 35-day period beforehand, but could definitely be reaching it over the next week or two, especially when GameStop has reached that 35-day period in the past and ran to $500. Now again, interestingly, and also kind of following on from my video earlier, Samuel Clemens tweeted saying it would appear that Bank of America has some total return swaps on AMC and APE. We know Bank of America is the prime broker for Citadel and is therefore likely the counterparty for the majority of their total return swaps. And it appears Bank of America does indeed have total return swaps for AMC, likely being Citadel's counterparty. Now, it doesn't actually show the notional value or total number of total return swaps that Bank of America holds, but I imagine it's a big number. Now, what is also very, very interesting is that Twitter, or Platform X, is seeking a financial data giant to build a trading hub inside the app. Basically saying that Twitter is aiming to become the next largest trading platform and hoping that many people will use Twitter to trade stocks. I personally think this could be a brilliant venture for Elon Musk and a brilliant opportunity for AMC and GameStop investors. We know that Elon Musk hates manipulative short selling, and therefore he will design this Twitter trading platform to eliminate all kinds of manipulative short selling all at once. I imagine he'll make it so the platform routes through lit exchanges and does not go to payment for order flow providers. So if you have multiple millions, tens of millions, if not hundreds of millions of people using the Twitter trading platform and routing all trades through lit markets, not just AMC and GameStop trades, but trades in Apple, Netflix, Amazon, Nvidia, growth stocks, and literally everything through lit markets, it could absolutely destroy those manipulative short sellers. I personally am very, very excited to see where Twitter or X goes with this trading platform, who they decide to partner with, and how long it takes them to create the trading platform. And now finally, Charles Payne has also tweeted saying this is huge. Congress is waking up to another injustice towards retail investors. It seems Congress has sent another letter to Gary Gensler, this time with tons and tons of signatures, practically forcing Gary Gensler's hand. This letter from Congress says we write to request that the SEC review events surrounding Metamaterials Series A preferred shares, or MMTLP. Additionally, we request the SEC provide the committee with a substantive briefing on its findings. To that end, we request the SEC to review the activities surrounding these events, and that review should include a timeline of trading of MMTLP on OTC markets, the actions taken by the SEC, self-regulatory organisations, the issuers and the transfer agent, and other relevant parties during that time, and asking for responsive information to be submitted to the committee by August 11th, 2023. Now, obviously, that's only a week away from today, so it's going to be very, very interesting to see what the SEC submits. And not only to see what the SEC submits, but how Congress ends up forcing their hand and exactly what they end up doing as a result. So guys, be sure to let me know what you think down in the comments below. And as always, guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.